Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset space. For those who prefer to read, you can go to our blog, ar.ca/blog, where we do a written version. Sometimes it overlaps, sometimes it doesn't, depends on what's going on in the market that week. And as always, disclaimer, this is not investment advice. It's been a couple of weeks since we've been here. Took a little bit of time off over the holidays. Not really, obviously, it's the crypto market, so we didn't really take time off, but we took time off in terms of recording this for you guys. But it's certainly been a volatile last couple of weeks. We certainly had a really sharp rally. Actually, let's go back even further. Really since the FOMC on December 15th, you had a pretty sharp sell-off in crypto, a pretty strong relief rally in the first few days of the year here, and then another pretty sharp sell-off, and now a little bit of strength today. So long story short, it's a lot of volatility right now, and it's hard to know for sure if that volatility is really based on just how markets are going to go this year, or if it's still a little bit of seasonal, in the sense that obviously the TradFi folks are dominating Bitcoin and ETH now via the ETF. Having two back-to-back Wednesday holidays to end the year certainly means a lot of people weren't in their seats. Obviously, first couple weeks of January, people are mostly in meetings trying to set stage for the rest of the year. So we'll see if this volatility continues. I think the most interesting thing, though, to me, has to do with just how much the crypto markets are once again following everything in the economic calendar. For those of you who have been doing this for almost a decade, like we have, nobody cared about jobless claims 5 years ago in crypto. Nobody cared about CPI. This is a very recent thing in the last couple of years because of what happened in 2022 with the 4 or 5 standard deviation move in Fed's hiking relative to expectations that dominated everything in crypto. Now everybody in crypto is a macroeconomist following everything. So what was really interesting to me, at least this week, or rather last week, was after we had another robust U.S. jobs data report, the market sold off. Equities sold off. Rates went higher. Crypto sold off really sharply. Basically, that means good news is bad news, right? Obviously, objectively, lots of jobs is good. That means the economy is strong. GDP is going to be fine. Why the market sold off so hard on this is because it increased inflation expectations, which therefore lowered expectations of Fed rate cuts this year. Why is this so silly, in my opinion, though, is obviously, again, good news is good news. You want good news. Historically, stocks fall when the Fed actually cuts rates because they're cutting for a reason, right? The only reason they'd be cutting rates aggressively is because you have a really bad economy and jobless claims and reasons why they would want to jumpstart the economy with rate cuts. Pausing rate cuts or even ending rate cuts altogether is usually a pretty good thing. That's indicative of a strong economy. The time to panic, and we put a chart of this in the write-up if you go ahead and read it, the time to panic is when the Fed actually starts to hike rates aggressively, because either that's to combat inflation, or if the Fed goes the other way and starts really aggressively cutting rates because of a recession. So anything else, a pause in rate cuts, that's a good thing. You can look at any graph of markets over that time period. So I think the market is a little bit kind of day tradery right now and not thinking bigger picture. With that in mind, again, bigger picture, we've got the U.S. presidential inauguration coming up next week. For some reason, crypto folks are calling this a catalyst and an event. I don't see it. I mean, none of the equity or debt people are talking about the inauguration itself being an event, but this is crypto, and a few people who have loud voices and loud followings get picked up, and people start to do it. Shout out to Arthur Hayes, former founder of BitMEX, who came out saying that he was going to sell everything ahead of the presidential inauguration. This is ridiculous. The inauguration itself is a non-factor. For those of you who remember the last Trump presidency from 2016 to 2020, Trump speaks every day. He doesn't need a platform to speak. Yes, the inauguration, maybe he talks about Bitcoin and a strategic reserve. Maybe he talks about crypto, who knows? But it doesn't matter. He's going to talk literally every day this year and for the next 4 years, and markets are going to trade on that. So I don't think the inauguration is a big deal. What I do think is a big deal, though, is people have PTSD in the crypto space. For those who are old enough like myself who remember 2008 killed investors, and it took a long time, myself included, to really trust the equity markets again, to really get fully invested again. Me personally, it took almost 3 years to get my money back in the market and really believe that equities were a long-term investment again. That's how a lot of crypto people feel right now. They are so scared still because of 2022 that they don't realize that this is one of the biggest opportunities we've ever seen in the space, ahead of a 4-year presidency and broader administration. that's going to be very pro digital assets and very pro crypto. Um, Meaning, it's not just about whether or not we get regulation, right? There's two components to this new administration. One is just having less hostility towards the space, meaning no more Operation Choke Point where companies are getting cut off from their banks. No more, if you innovate or experiment in any way, shape, or form, you risk the SEC going after you or the DOJ. Just having a little bit of a less hostility means more innovation, more experimentation, more tokenomics changes, more events and catalysts. That's a positive. Further down the road, if you actually do start to see meaningful regulation, whether that starts with stablecoin regulation and then eventually, maybe something from the SEC or some other department that actually regulates the issuance and the reporting of digital assets, that's going to usher in a whole new wave of institutional buyers. So if you're day trading or weekly trading on charts or on, inauguration or anything like that, and knock yourself out, have fun, but you don't miss the forest for the trees here, in the sense that this is certainly going to be one of the best environments that we've ever seen for digital asset investing. What else I thought was interesting over the last couple of weeks was, I spent a lot of time reading prediction pieces. I'm sure many of you did as well. A lot of them are really interesting. Probably a lot of themes that you've seen over and over again about DeFi strength and RWAs and AI in crypto specifically. But I thought was more interesting was all of the traditional finance prediction pieces that were out there, because consensus in the traditional world has been wrong for 3 straight years. You look at last year, for example, the S&P 500 finished over 400 points higher than the highest estimate at the beginning of the year, meaning all these Wall Street analysts and macro strategists all called for the S&P 500 to end somewhere between here and here, and instead we ended here. So that's not really that big of an outlier, because it's been true for the last 2 years as well. 2023, 2022, same thing, huge whiff by all the strategists. Same thing in the bond market, right? Nobody was calling for a 100 basis point rate cut last year, coupled with a 100 basis point rise in the 10-year. You go back to 23, they got everything dead wrong in fixed income again. Go back to 22, nobody was calling for as many rate hikes as we had. So consensus expectations have just been really, really wrong ever since COVID. And I can remember, again, I've been doing this almost 25 years. I cannot remember a time where every consensus view in the debt and equity markets has been so wrong for so long. So why am I bringing that up? Well, everybody was bullish going into 2025 now, largely because they were underexposed to the equity market over the last 2 years. That could be potential headwind, right? Now that everybody is bullish on equities, potentially maybe there's no new money going into the space. And if equities have a rough year, crypto will probably follow, at least to some extent, given the recent correlations. Aside from that, I think we obviously saw the last 2 years with Bitcoin really dominating in terms of not just narrative, but also fund flows with the new ETF and the almost $20 billion of new flows into the ETF last year, capped off by another $4 billion, I believe, in December. The question is, are we going to see Bitcoin calm down and maybe see gains in other parts of the market? From a timing standpoint, typically, and again, I'm not a big believer in 4-year cycles, but typically, we have seen that after a strong year in Bitcoin, in a halving year like 2023 or 2019 or in 2015. I'm sorry, I'm off by a year, 2016, 2020, 2024. Typically in a halving year, the next year you see real strength in other areas of the market besides Bitcoin, things like DeFi, gaming, Web3, et cetera. So, from a timing standpoint, I think you also have that tailwind behind you. Usually the first quarter of the year, pretty strong for digital assets. And also, again, we just had a pretty big flush in the last 3-4 weeks. I mean, some tokens are down anywhere from 40 to 60% just in the 4 weeks post the FOMC meeting in the middle of December. So, I think there's a lot of reasons why it's time to maybe move beyond some of these daily and weekly volatility and some of these flows and look again more towards what's happening over the next 3 months, over the next 3 years. It seems like a pretty bullish time to be in digital assets, but we'll see. We'll play it out week by week as things happen here. Certainly right now the mind share is in AI more than anything. I think shout out to Kaiko and their sentiment analysis. About 70% of crypto's mind share right now focused on AI and AI agents. Again, we've seen that before. 2021 was a good example. January of 2021, after a very strong 2020 for Bitcoin, January 2021 was all about DeFi. DeFi was up, 50 to 300%. And then DeFi cooled and didn't do much the rest of the year. And instead, what happened in February, we saw a huge move in centralized exchange tokens, things like BNB and even FTT back in the day. And then we saw in March, we saw a huge move in gaming and some Web3. And then in April, we saw a huge move in meme coins and legacy tokens. So the point is, these sector narratives shift a lot, even in bull markets. We're only 2 weeks into the year. I still think we are in a bull market. There's definitely reasons to be investing in this space. But I do think this sector by sector narrative is going to change a lot over the years, and hopefully we'll bring a lot to you throughout the year in terms of what's interesting and what's not. So that's it for this week. We'll see you again next Tuesday. I hope everyone had a good holiday, and cheers to a good year in digital assets. Thanks, everybody. Take care.